All right, well, go ahead and get your speed drill and review exercise booklets out. We're obviously done with speed drills. We did our last one already, but we do have two more review exercises that we're going to finish up. We're going to do one today. We're going to do another one in our very next lesson. We skipped over exercise 34 to get to our final speed drill earlier, and I want to go back and hit exercise 34 today. All about taxes and stuff. And we've talked about taxes loosely before. We talked about taxes when we talked back a long time ago in these review exercises about gross pay versus net pay. Do you remember what gross pay and net pay are? Gross pay, you might remember, is all the pay you've actually earned. It's what you deserve based on the hours you put in or the contract you signed. That's the pay that your employer ought to be giving. The net pay is what you really get because, in addition to some other deductions and withdrawals, the government, right, wants their unfair share, right? Uncle Sam is the ever generous, you're ever generous with Uncle Sam. And so you're going to give up some of your money in taxes, remember. And so some of those taxes are withheld. I think we've briefly mentioned before the FICA tax. If not, you may remember from 7th grade talking about the FICA tax, Social Security, Medicare. They get a little percentage of your pay to keep those two programs going. And the idea is that one day when you're old and gray-headed and you need someone to pay for your health care and you need someone to help pay for your retirement, those even younger than you, people who aren't born yet, will be paying into Medicare and Social Security, and that will help to fund your programs. So that's kind of how that works. That doesn't mean I necessarily agree with all of it, but that's what's there. That's how it works. So FICA taxes, also federal income tax. You make money, the Internal Revenue Service, you see that there on page 29. Income tax, federal income tax, is deducted from an employee's pay and sent directly to the Internal Revenue Service, or the IRS, throughout the year. Every paycheck is smaller than it should be, because your employer has sent money to the IRS. Social Security, Medicare, that's your FICA tax, Federal Insurance Contributions Act, and then also your federal income tax has already been sent to the federal government every single month. Uncle Sam gets a piece. Now, how much of your paycheck gets sent to the IRS? Well, it depends on how many people depend on you. For instance, when I worked my first job, and the forms have changed a little bit. We're actually re-recording this, by the way, so if you're like, he looks different. Okay, I do look a little different because this is actually 3 years later than the rest of my pre-algebra videos. But the W-4 forms have changed. When I was first a college student working my first job, and it asked, how many dependents do you have? The answer was 0. I'm a college student. I still depend on my parents, technically, legally. And so I couldn't claim any dependents. So Uncle Sam's like, ha ha ha, 0 dependents, eh? I can get all I want out of you. And then when I began working a job and I was just a single guy, no longer dependent on my parents, now I have 1 dependent. And then I got married, 2 dependents, me and my wife. Now my wife worked. She could take care of herself. She was taking care of herself before we were married, but technically, legally, she was a dependent. And then we had a child, 3 dependents, me, my wife, and I. And then the number just kept changing. And now the W-4 forms don't quite work that way. They specifically ask, okay, how many dependent children do you have? And there's math that's done on a form. But you need to know this, the W-4 form is the form that you would fill out whenever you start a new job. And it tells your employer kind of the math behind how much gets withheld from your paycheck. So that affects how much gets withheld. Obviously, the amount you earn. People who make big-time money get big-time money taken out of their paycheck. People who make small-time money get small-time money taken out of their paycheck. So 2 factors affect how much the IRS gets. That is your amount of money you make and how many dependents you have. How many people depend on you. And of course, this money, again, every month gets taken out. State income tax as well will be withheld. And the states have their own tax brackets and stuff like that. So some states don't have state income tax. Some do. Georgia does. Okay, so I work in Georgia, Alabama. I live in Alabama. They have state income tax. And so they also withhold a percentage of my pay for that as well. So again, what I'm left with is called the, do you remember? Net income. What I'm left with is the net income. Hopefully you remembered that. So two forms that you need, or three forms are mentioned here. First is the W-4 form. That's what you fill out. It tells the employer how much do you withhold. At the end of the year, or technically the beginning of the next year, but once the whole fiscal year is done, we're into the month of January now, we're ready to start a new year, your employer will give you and the IRS a form called the W-2 form. Note that, the wage and tax statement. That tells you, here's how much you earned, here's how much we already gave to the government. They also send this form to the government. So the government can be like, oh, this is how much you earned, this is how much we got. Okay. W-2 form. W-4, employer, based on this, here's my facts, here's the facts about my family. Employer uses that to figure out how much he's going to withhold. Then you get the W-2, this is how much we did withhold, here's how much you should have made. Depressing sometimes. Then, based on the W-2 form, look at the fourth paragraph now, the employee then files his taxes. He fills out a form called a 1040 form. Form 1040 is a big old long form that has all kinds of extra worksheets you attach to it, where you basically figure out, did the government get too much of my money? Or do I still owe them money? You're hoping you don't owe them money anymore. Okay, is basically what it comes down to. You're hoping they've taken too much and they got to give you some back. That's all the 1040 form. Now, admittedly, pretty much nobody still fills out a 1040 form anymore. You do it all online. And so all you do is answer questions that a tax software asks you. And as it asks you questions, it's filling out the 1040 for you. And it's a much easier way to do things. But technically, when you file, there is still a 1040 form that goes to the IRS. Based on the numbers, they'll figure out, here's how much, based on all these external factors, here's how much we should have withheld, here's how much we did withhold. And if they withheld too much, you get a refund. If they didn't withhold enough, you got to pay them the difference. Now, these numbers are based on a couple of terms that you need to note here. First of all, a term you may or may not remember from your 7th grade financial literacy supplement is this term adjusted gross income. This is how much you really earned. Remember, gross income is how much the employer should have paid you to begin with, right? Well, you might have other income. What if you've got some money sitting in an investment and you're making money? You might remember talking about stocks and bonds and things like that, capital gains, right? Maybe you sold some stock and made a profit off of that. Well, that's income, and you ain't paid taxes on that yet. Maybe, like say, you have money sitting in an investment account. It's making money. It's earning interest. And that's adjusted gross income. Maybe you put money into a retirement plan. And so your income is actually lower than they thought it was. So they thought you made this much, but because you've taken a portion of that and put it into retirement, really your income's down here. Whatever. There's different factors that affect the adjusted gross income. The adjusted gross income tells you how much you really, truly earned throughout the year. Not how much money you got, but how much money you earned throughout the year. Remember, there's something called a deduction. The government already says, okay, the first X amount of this, we aren't going to touch. I think right now, as I record this, the single person, a single individual, the government says if you ain't married, the first $13,850 you earn, we aren't going to tax it at all. After the first $13,850, we're going to take 10% or 12% or 22%, depending on, which is a really big number, depending on how much money you've earned throughout the year. Okay, if you earn a lot of money, they take a bigger percentage. I know, it's not ethical, it's not right, but the more you earn, the more they take. Which you might remember from 7th grade, those who had me in 7th grade for the financial literacy, we looked at a problem one time where a guy made just a little bit too much. And he ended up in a higher tax bracket and ended up losing money on the deal because even though he made more, he paid so much more to the government that he ended up losing money, okay? So again, it disincentivizes and that kind of thing, this graduated tax scale, but whatever. If you're married, right now the number is $27,700. That the government will say, okay, this first $27,700 that you earned, we're not taxing any of that. After that amount, we're taxing what's left. So really you just subtract that number, whichever number applies to you, from the adjusted gross income to get the income that the government is actually going to tax. That's called the taxable income. All of this is figured on the 1040 form. All right? So those are some things that we talked about in financial literacy in 7th grade. Kind of touched on the gross income, net income thing earlier. Just wanted to make sure I mentioned that. Now, I do want to point out, remember I mentioned the FICA tax, the Social Security Medicare? Everybody pays the same percentage on that. So it doesn't penalize you, you make more, you make less, you just pay the same percentage. That's what we call a flat tax. And that's the same percentage always, 7.65% for everybody. Now, I say it's for everybody. There is one little caveat. If you're self-employed, you got to pay double. You're like, wait, what? Double? Well, here's why. Let's just say I earn $100. 7.65% of $100 is $7.65. $7.65 out of my $100 is going to go to help fund Social Security Medicare. But my employer, while he pays me $100, well, okay, he pays me $92.35 and pays the government $7.65. He also pays an extra $7.65 on my behalf. So the employer pays half, 7.65%, and I pay 7.65%. If you're self-employed, you are the employer and the employee. So therefore, whatever you pay yourself, you have to pay 15.3%. You pay both 7.65% of. We'll see that a little bit more in the next lesson, but yeah, you pay twice. You pay employers FICA tax and you pay the employees FICA tax if you're self-employed. So, quick rundown. Key things to just tuck away. Again, the purpose of these review exercises, you're not tested and quizzed on if you haven't been all year, is just to make sure you don't forget things that you learned in 7th grade financial literacy. Make sure you remember these things that you've gotten. So quick rundown, the group, the organization, the bureaucracy that handles all the taxes, that brings in the money that helps to fund the government and all their crazy expenditures that they waste money on, like sending money overseas to different countries we don't really care about. Anyway, all of that stuff is funded by a bureau called the 3 letters, and the IRS, hopefully you remember that, Internal Revenue Service. And they collect taxes from the employers. The employers send the money every single month, every paycheck actually. As they pay you, they're sending a portion of that to the IRS all year long. And they base how much they send on how much you make and how many people depend on you. How does the employer know how many people depend on you? How many dependent children you have, or perhaps other children or other dependents? Maybe grandma's living with you. And so that's a dependent if grandma's living with you and you're taking care of grandma. How do they know that? You fill out a form. What form is it? The W-4. And you fill out a W-4 when you start every new job, or if you have a life change, you can update your W-4. At the end of the year, once all the money's gone to you that's going to go to you for that year, and all the money that's going to the government has gone to the government for that year, usually ends up being January because it takes a little while to get the files together. In January, you're going to get a form from your employer, and the IRS gets one too, called and the state, by the way, gets one too, called the W-2 form. Good. And you're going to use the W-2 and all your different monies that you've spent on stuff throughout the year. You're going to take all that and figure your taxes on a form called the 1040 form. Good. On the 1040 form, you're going to figure all the money you've made, not just from your work, but from other side hustles you have, investments you have. You're going to figure out money that you've already spent or invested in other things that technically needs to be taken off of your income, because that's not money you kept. You invested that, or you put that into retirement, a tax-deferred retirement plan or whatever. That amount that you really earned when all the different factors are accounted for is called your AGI, which stands for Adjusted Gross Income. And the government's going to look at your adjusted gross income and say, well, we're going to give you a standard deduction. There's a certain portion that we're not going to touch. After that standard deduction, whatever's left, that's the income we're going to tax. Don't make this too hard now. We call that the taxable income. There we go. And we're going to take a percentage of that taxable income. 10%, 12%, 22%, whatever, depending on how rich you are. Along with all that income tax, remember, there was a tax represented by 4 letters. Social Security, Medicare, we call FICA tax, and that's a flat 7.65% for every employee. The employer pays another 7.65% on your behalf. Well, let's look at exercise 34. We're going to do this one together. Now, in the next lesson, we're going to do the review exercise 35. If you flip over on the next page, it kind of highlights the FICA tax again, just kind of a quick recap. But you're going to do the next one on your own. So lesson 175, you're trying those problems on your own. But these problems, let's work them together just to help kind of get back in the groove of tax stuff and how does all the stuff I just talked about apply mathematically. So look at page 29 in your review exercise booklet, exercise 34. And look along with me at that first problem, if you would. It says John makes $3,600 each month, $3,600 each month before taxes. Somebody would call that his gross income. Each month, he has $158.34 taken from his paycheck for federal income tax. By the way, that's approximately how much would be taken out if he's married with 2 kids. Okay, that's about how much they would take out. And another 7.65% deducted for FICA tax. So, question A, what is John's gross annual income? And then how much total tax is deducted each year? Well, first of all, what's his gross monthly income? $3,600, right? That's how much he earns. Gross is what you really earn. It's not what you get to keep, and it's kind of gross that you don't get to keep it, but it's what you've earned, right? $3,600, and that's every month. So when it says gross annual income, well, annual means, in 1 year. What do we need to do? Hopefully you just said multiply by 12. So let's do that. Let's multiply $3,600 or $3,600 times 12. Remember, let's hang the zeros off to the side. Put the 2 zeros back. And he's earning not a whole lot, but he's decent, sort of middle class, $43,200 gross annual income. It's not a lot, but it's not bad. Okay, he's median income for the United States. He's not rich, he's not poor. He's right there in the middle. Now, that's how much he's earned every year, right? That's not how much he keeps, though, remember? Uncle Sam every month takes $158.34. What do you suppose we're going to have to do with that? Yep, multiply that by 12. Tell you what, let you cheat a little. Get your calculator out. Get your calculator out. Go ahead and multiply that with your calculator. 158.34, multiply that by 12. And hopefully you find that over the course of the year, the government has gotten $1,900.08 of his money. Almost $2,000, right? Almost $2,000 of this has actually gone to the government. Plus, every month, 7.65% is deducted for FICA tax. Well, remember, he earns $3,600 every month. If 7.65%, remember, boink, boink, to make it a decimal, if 0.0765 of that or times that goes FICA, multiply that on your calculator now. How much every month goes to FICA? 0.0765 times the 3,600. Every single month. $275.40 going to pay for Social Security and Medicare. But that's every month. So just like we had to take his income tax times 12, we need to take his FICA tax times 12 as well. So take what's on your calculator, multiply that by 12, and how much is going to the government to pay for Social Security and Medicare? $3,304.80. So the question, though, said how much total tax is deducted each year? Well, he's paid this and he's paid this, so to find the total tax, what are we going to have to do? Now, add them together, right? So add the 3,304.80 to the 1,900.08. And I'm looking at my answer key. I think this is supposed to be 1,980. No, it's 08. My answer key's wrong. All right, so that's wonderful to know. 1900.08. Okay, and so we add that to the 3,304.8. All right, and so that consequently means my answer key is slightly off again, which is wonderful. It's okay. We're making some edits here. And so his total tax that he's paid throughout the year, this is total tax he's already paid, should have gotten $5,204.88. This is answer to part B. Of course, this here's our answer to part A. His gross income, we said he earned $43,200. But $5,204.88 of that has gone to the federal government, both in income tax and in FICA tax. All right, so there's our answers so far there with number 1. Okay, hopefully it is beginning to come back to you a little bit, this idea of gross income and FICA tax and income tax and all that kind of stuff. Well, let's progress here. Part B says John has no retirement account. He has no other investments. He doesn't have any side hustles. So his adjusted gross income is equal to his gross annual income. This is his AGI, right? This is how much he really truly earned this year. He didn't have any other sources of income or anything else that was taking away from his income. That's how much he really truly did earn. So remember I said that his income is this number here is based on being married with 2 kids. Well, since he's married, he gets the standard deduction that's $27,700. So remember, the standard deduction is what the government says, okay, we're not going to tax you on this much. We're going to tax you on everything after this much. So he earns $43,200, but the government isn't going to charge tax on $43,200. His taxable income is smaller. We take off $27,700 or subtract $27,700. So take $27,700 away from his adjusted gross income. How much money is the government actually going to tax him on? Again, it's a deduction, so we're going to subtract it. A really nice looking number there. Nice even looking number, $15,500. That's how much the government says, okay, we can tax him on this. Does that make sense? So that's his taxable income. We take the adjusted gross income minus whatever this deduction is. In this case, his deduction is $27,700. That leaves the taxable income, and the government says, all right, this is what we're going to tax you on. Now, we said that this is kind of middle income, right? This is median income. He's not rich, he's not poor, but he is in the lowest tax bracket. And being in the lowest tax bracket means the government comes through and they're going to take 10% of the taxable income. That's how much the government has decided they're entitled to. And I see when you say it that way, it sounds awful, doesn't it? That's how much the government thinks they're entitled to. 10% of whatever he makes after the deduction we so graciously have given. So, how much taxes are actually due? Well, 10%, you can do that in your head, right? It's a tenth. A tenth means you knock a zero off. So how much tax does the government deserve to get from John? $1,550, right? That's how much they deserve to get. Now again, this is income tax. He paid $5,204.88. That's how much tax he paid to the government. But that's not his income tax. The income taxes that are due is $1,550. And remember, he only paid this much in income tax. Well, wait a second. He's paid more than the government is actually deserving of, didn't he, right? He paid in excess. They have withheld more from him. So you know what that means? He doesn't owe nothing. They owe him. The government took too much. They were only supposed to take $1,550 over the course of the year. Somehow they managed to take $1,908 from him over the course of the year. They owe him a refund. And so, the last question says, based on answer 1B, which kind of included this, and based on number 3, how much does the government deserve? How much of a refund should he get? What do we need to do? If they took this much and they were only supposed to take that much, what's his change, if you will? What do we got to do? Right, we're going to subtract. And when we subtract the 1,908 minus the 1,550, he gets, glorious day, a refund. Now granted, it's his money to begin with. It's not like the government is being nice and giving him a bunch of money. This is a refund that he deserved anyway. But how much of a refund does he get, class? There we go, $350.08. Now, realistically, on tax forms, they usually round to whole dollars. Say we call this $1,933.05, and so his tax refund would be $350. They wouldn't do the 08 necessarily, or the 8 cents, but there we go. That's basic process. Hopefully that helps you remember how to work through taxes and stuff, because in our next lesson, we are going to work exercise, or I say we, you are going to work exercise 35, and you're going to do it on your own. So remembering the stuff from this lesson, when you get to next lesson, we're going to start with review exercise 35, and see how much you can remember. You'll be able to flip back here if you need to use it as a reference.